Hello, friends. Welcome to the Nirmal Bang. I am Piyush Jain, and today we are going to be talking about budget. Budget again is an annual affair, the Indian economic budget, and from the market perspective, perhaps over the last few years, it has slightly become less of an event. But from the perspective of economy, also from the perspective of knowing the direction where the economy is going, where the government is going to put the money, perhaps which sectors we should be really keeping an eye on from a sort of medium term perspective, and definitely those sectors then actually affect the stocks also in that sector. From that all point of view, budget is definitely a very important event. To understand the budget, its intricacies, where actually we should be watching out, what perhaps government could be doing in this budget, since this budget is going to be a vote on account, because the general election is actually around the corner, and then on a sort of main budget again basically is going to be announced post elections. So let's try and understand what this really means for us. And for that, let me call upon industry veteran, Mr. Saugata Bhattacharya, independent economist, and a person who is no stranger to our show, but always gives us insights on the economy. So welcome to the show.
Thank you so much, Piyush. Thank you for having me on your show. Thank you for your kind words. Pleasure to be talking with you.
So let's start again from the perspective of where we are right now. It's a vote on account. It's not a full budget like every year. Elections happen, and then post-elections, the finance minister takes a seat and then actually produces a sort of a full year budget. From that account, let's first try and understand where we are in FY24. This year, rainfall was lower than the long-term average, 94% about. We have seen some sort of dispersed rainfall, some sort of dispersed trend coming out of rural economy. So largely, when we look at FY24, the closing numbers versus budgeted estimates versus the advanced estimates, what's your own sense where we are right now? Are we basically sort of going to end at a higher fiscal deficit number? Are we looking sort of perhaps at some sort of need to relook at the revenue numbers where we are at present?
So again, starting, I think the hallmark of the budget of the FY25 budget, whether it be vote on account or the full budget in June or July, I think the primary characteristic that we can expect will be policy continuity. I think the government has shown a great deal of fiscal discipline. The fiscal discipline actually has been its hallmark, and that stance is likely to continue. So that's the overall theme of the budget. For the FY24, I think we are going to be very close to the budgeted 5.9%. It may be slightly higher, say around 6% odd. That's primarily not because of a slippage in the budget. That's because of a lower than expected, lower than budgeted nominal GDP growth, which had been taken in the budget as 10.5, 11% because of the very low WPI inflation numbers this year in FY24. There might be some slippage, so the GDP deflator might be low. But that's the reason for the budget. I think the government will be very committed to carrying on in the glide path of a 50 basis point, 0.5% reduction that they have planned every year. So probably from if we are assuming that a 5.9% fiscal deficit this year in FY24, we should be expecting somewhere around a 5.3 or a 5.4% fiscal deficit in FY25 in the coming year. So those are the broad contours. The good news for this year has been extremely strong and robust direct tax collections. Even GST has been fairly good, but the hallmark has been the very robust direct tax collection, both personal as well as corporate direct income tax. This is probably likely to be to provide a bit of space in adjusting their spends. I think before the elections there might be some increase, and in the vote of account, some announcements of some increases in some of the programs in revenue expenditure. But the robust direct tax collections is likely to provide them a buffer, a cushion. So that's the broad contour to begin with on the budget.
Well, I want to come back on the collections, but before that, you just touched upon which I wanted to ask you. We're going to elections, general elections, basically once in a 5 year. Then actually, obviously, last time I remember 2019, PM Kisan scheme actually was something which the government had launched, was being received with a great sense of applaud and euphoria in the rural economy.
Yeah.
So social schemes like Ayushman Bharat from the health perspective, from the food perspective, the Garib Kalyan Anna Yojana,
Yeah.
PM Kisan scheme from the perspective of supporting the agriculture sector.
Yeah.
Are you expecting any hike in allocations here or hike in spending here? Or basically, like for example, Kisan scheme, are you expecting any hike in the sort of disbursals here? Any sort of move which you expect that the government perhaps could boost its social expenditure?
So I'm quite sure, as you surmise, that there will be an increase in spends, revenue spends, particularly in the agri-rural side of the sector. Remember, one of the key things that a lot of us have been talking about is continuing weak rural demand. And which is something that we are seeing even from the commentaries of some of the FMCG companies that we have seen for the Q3. And on top of which, as you mentioned, I mean, because of a somewhat lower than expected rainfall, lower reservoir levels, etc. So they have to be mindful of growth in food production, in food output, is something that they need to be worried about. So it's very, very likely, and this has been talked about in the media, etc., that the PM Kisan Yojana, in particular, from the current 6,000 rupees per year for farmers, that might be extended to about 9,000 rupees in a year. You've already heard of the extension of the food free food program for the next year, next couple of years, 5 years. So that's something which is already baked into the expenditures of the budget. And remember that there is a significant amount of volatility in energy prices, and that will probably show up in continuing high fertilizer prices, which might necessitate higher fertilizer subsidies, because this is all part of the food ecosystem in the system. Together with this, in addition to the other programs that you mentioned, I think they're going to expand the scope of the social safety net, the insurance schemes for the informal sector, informal workers, workers in the informal sector. So that's another major program that the government has been mentioning, and which is something that I think is needed, particularly from the context of the weaker than expected rural demand, rural economy. Give a further boost to economic activity, economic growth. So these essentially are the main revenue expenditure increases that we think are likely to show up. There might be additional expenditures on the healthcare, as you mentioned, Ayushman Bharat, additional expenditures on education, primary education, tertiary education. So all of that is also likely to show up. But remember that whatever they do, they are likely to maintain that 5.4, 5.3, or 5.4 percent fiscal deficit. In other words, I mean, other than the expenditures, both on revenue and capex, this has to be a continuing balance between
I'll,
continuing
I'll
balance between.
I'll come on that. I'll come on that in terms of how they're going to balance it. But
Yeah.
one interesting question I want to ask you, and that is February 1st, and we still have 31st March. We still have 2 months from the
Yeah.
budget perspective. Are you
Yeah.
expecting any sort of increase in sort of agri spending or social spending between February and March, and that might go into FY24 spending itself?
There is a likelihood, given the weakness, as I mentioned, in
Be-
rural demand.
Because just interrupting with one line, because money in hand creates more impact versus slogans, and as you know, it's an election year, so that's why I was asking you this question.
No, no, completely agree. I mean, that before, I mean, prior to the actual election turnout in May and June, there might be an attempt to increase expenditures. Remember, it's a very critical question, because as of now, for the last 2 or 3 months, actual balances with the government, in other words, the revenues that the government center is getting, and the expenditures that it seems to be doing, is actually that gap has increased, as a result of which this is one of the primary contributors to the deficit in the system liquidity. So the balances with the center is very, very high. So other than not having to spend more out from fresh borrowings, etc., they still have that huge reserve. Our estimates are anywhere between, say, 2.5 to 3 lakh crores that the center still has kept with the RBI, and that definitely gives them a buffer. You remember, you will also get additional tax collections in March, and the GST collections. So that has put them in a good place with a large war chest that they can actually spend the money before the end of March. In other words, in FY24. And then, of course, whatever surplus the cash in hand that they carry over into FY25 gives them an even larger scope for spending, continuing to spend in April and May.
That's actually very important to hear because that implies that we might not be expecting any major hit in terms of liquidity in the market or perhaps any sort of major swing from the perspective of fiscal deficit surprise. Would that be a fair statement or fair assessment?
No, I think that's a very accurate statement. That liquidity is a problem now, as you're seeing from the
Hmm.
current banking
Yes.
results. That financial savings and hence consequently deposits have become a very scarce commodity. Banks are fighting for deposits, so that's something which needs to be addressed because loan growth, because unless system deposits increase, banks, NBFCs, other financial intermediaries will find it very difficult to give credit at a pace which is probably consistent with 11% nominal GDP growth. So that's something that which needs to be addressed. RBI's stance, I think, on liquidity and trying to keep liquidity in a deficit mode to keep overnight and short-term borrowing costs higher, I think will begin to ease off, but probably not in this year, not in FY24. That's a separate issue altogether. But this is something that I think system liquidity and the need for additional credit in the system will have to be part of the policy balance that the center and the RBI have to decide.
Sure. And so, what is your own expectation from the perspective of capex expenditure and both revenue expenditure as a percent of GDP for FY25 budget?
I think one is that if from let's talk about the revenues first. So given that they're 5.4 on top, 5.4 fiscal deficit on top of the 11%, say around 11% nominal GDP growth, the total amount of borrowings that might be needed in the system is actually lower. In I mean, so and if we are talking about a 11% nominal GDP growth and then a consequent 15 to 17% corporate earnings growth, your tax revenue collections, the buoyancy is likely to remain quite strong. Maybe not as strong as we have seen in FY24, but it's reasonable to assume that they can still assume this year it was actually lower, 11%. We have far exceeded that. So maybe they will try to attempt a 12% on direct tax collection growth. Even GST, I think because of economic activity, because of compliance reasons, even GST growth is likely to be relatively strong. So given this, and with the lower borrowings that they are needing, that they might need, my assumption is that the actual capex expenditure will probably not increase too much, will be maintained at about the 10.5, 11 lakh crores that we have seen that has been budgeted for FY24. But as you mentioned, this will give them room for increasing the revenue expenditure spends. And the increase in revenue expenditures, I think, is needed and particularly focused on the rural segment because this is where demand has been flagging. So if that spend actually multiplies into rural income, rural demand, etc., you might actually get a higher than expected growth, say around the expected, as RBI is forecasting around about a 7% growth. So that might actually help in boosting GDP growth a little bit, rural spends.
Right. So one small question, and have you sort of worked out any major expectation on the net borrowing number? Like how much the government would really have to sort of borrow?
My
FY25.
sense is, yeah. So my sense is that they will not increase. So one part is because of the maths, the algebra of a 5.4% deficit on a 11% growth. So the deficit number is itself lower, and on top of which some of the small savings collections, which probably will need to be tapped this year. So probably some small savings collections will also be factored in. Remember that there is a chance that interest rates will begin to be cut later in the year. Maybe the amount of money that has been flowing into equity markets is likely to be a little bit lower and not too much higher than what we have seen in FY24. So that gives a chance for small savings because the interest rate differential between expected bank deposit rates and the small savings interest rates. So small savings might actually increase in FY25. So, given all of this, I wouldn't be surprised. I definitely do not think that the net borrowing program will increase much beyond the 11 lakh crores that we have budgeted for this year. It might actually be lower. It might actually be lower, which is a big,
Oh,
big
if
event.
that's the case, then perhaps that could be good for the bond market also, and that should be
Very much.
something interesting to
Ve-
watch out
ve-
for because liquidity is already tight. You cannot go worse than this. So
Yep.
perhaps maybe I think later part of the year that should be good.
No, no, absolutely, and there are many factors which are very beneficial for fixed income bond markets. So one is India's inclusion into bond funds. So I mean, major inflows into Indian bonds, Indian securities. So that's one. The lower than expected borrowing program that they will find. And then remember that already, I mean, market players are beginning to position themselves for an eventual cut in interest rates, which actually is a big demand driver for bonds. Insurance funds, other pension funds, provident funds are also buying securities, longer dated securities. So that's very, very good. So that this gives the government space to actually expand the long duration, long maturity bonds coming in from the contractual savings. Banks will begin to position for a rate cut. So they will demand more SLR securities. And in addition to that, if there are interest rate cuts in the global environment, that might also begin to get a risk on sentiment in global investors. Besides the allocations for the index bond fund that we will join in starting from June to January of 2025. So all of these are potent a very, very good, very, very, very positive sentiment that we are
So
likely
you
to see in
you
bonds.
definitely, sir, actually are sounding positive for my audience. I think our viewers are going to feel positive about the stock market also. But coming
Okay,
back
I
from
mean,
a sectoral perspective, you're
okay.
saying something, sir.
No, no. I just wanted to say that there is no equity investor anywhere in the world which does not like a rate cut. So this will be very, very good, not just for the bond markets, but even for equity markets.
Absolutely. So now sectoral perspectives of what do you expect? Perhaps which sectors we should be keeping an eye for? Which sectors need some boost from the government? Is it going to be clean energy, or is it going to be a sort of continued spending in railways, roads, infrastructure? Where which sectors you think this time the spending is going to continue its momentum or have a new momentum?
No, so I think that's exactly what from the capex side is exactly what is going to happen for many of these for the programs. So the main thrust of public sector investments capex have exactly been these sectors: railways, defense, roads, etc. To a certain extent, electricity, the clean energy programs that you're mentioning. That's a very big focus area for the government. So clean energy, and then all the ancillary sectors which benefit from investment in these core sectors: cement, steel, exactly the things that you've been seeing. Defense would probably be another core area because I mean, given geopolitical concerns and what we are learning, and increased indigenization efforts, Make in India programs. On the manufacturing side, my sense is there might be higher allocations for certain segments in the PLI sectors, the production linked incentive scheme programs, automobiles, electric vehicles, automobiles, solar, and from the electronics segment, which is one sector that has been doing very well and has been boosting exports. So a slight increase in many sectors: chemicals, specialty steels, specialty chemicals, etc. But the core focus areas for the PLI will also allocations will probably also increase.
And from that perspective, now I want to come back where actually I had said that I'll come back later. In terms of the tax collection numbers, um, from where we are right now, because divestments, and divestment is not a new story. We always talk about this every year.
Hmm.
Very high expectations, but the government doesn't divest to that extent. So divestment numbers have been low. Yes, there has been some support from tax collections, but broadly, are you carrying the sort of same confidence as we move into FY25 from the perspective of how the government will be able to actually raise money?
So, few things. One, actual straight out strategic sales. So, I mean, relinquishing control, giving up control, that probably will still be as difficult as it has been for the last few years. I mean, exactly as you mentioned. So I don't think there will be a huge increase in the divestment, the allocation, the outlay for divestment. Not an increase. If they manage to sell, it'll be good. Remember, public sector stocks, equity, share prices have risen phenomenally. So this is a very good time for the government, actually, not even for strategic sales. I mean, small sales in some of these stocks will yield them significant amount of revenues. And this thing is probably likely to continue into, I mean, the strong performance for PSU equities and shares. But my sense is that if the government actually comes back with a solid majority, which is highly probable given the current political scenario, then my sense is there might be a renewed push. Now this is the beginning of the third term, so this might lead to a renewed push for strategic sales. It's difficult because the political concerns, etc. The opposition from line ministries, administrative.
Yes.
But I think, given this is the beginning of the third term, there might be a little bit more adventurous in trying for more strategic sales.
Okay, so that's something interesting. Perhaps if I summarize, net borrowings number, basically we're not expecting any hike. Perhaps on an absolute number that could be lower. Fiscal deficit, the glide path should be maintained by the government. That's the expectation. From a perspective of FY24, we might see a mild slippage that perhaps you were highlighting, but FY25, the government should be able to maintain the sort of earlier guided path. And while the nominal GDP growth numbers could be slightly lower, perhaps due to lower inflation, but the tax collection numbers again are going to paint a very, very robust picture. And that is something which perhaps along with the rate cuts from the RBI could really sort of paint a rosier picture towards the later part of the year, while getting a boost from the spending from the government across revenue and capex. With that sort of very positive expectations, perhaps we'll wait for the budget to get again in touch with you and get a verdict on the budget. But for now, sir, as always, thanks a lot for all your insights on the economy.
And Piyush, thank you very much once again for having me on your show. Always a pleasure and a privilege. Thank you. Look forward to seeing you and chatting with you again.
And dear viewers, this was one of our conversations before the budget, and we'll keep bringing you more such conversations. Watch out for more such conversations. Thanks a lot.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.